next up we're going to be discussing ACA compliance, specifically what you can do to ensure the integrity of the data in your system when we are producing the forms, and then we're also going to just touch a little bit on the deadlines and some of the forms and sort of what they mean, etc. So let's get started. What's next? I'm sure you are all aware that the first ever filing requirements are actually this January in terms of the employer shared mandate. Applicable large employers need to file Form 1094C and 1095C with the IRS by February 29, 2016, March 31st, 2016 if filed electronically. We will be filing them electronically, and I'll get into that in a second. The 1094C is in fact the employer form, and the 1095C is the employee form. You must also furnish your employees with a 1095C by February 1st. January 31st is a Sunday, so it's February 1st is actually a Monday. And you must do so by January 31st, so it's a lot like the W-2. And down below, this is the form in which you will be receiving to distribute to your employees. Who needs to file? So in many ways, small employers are exempt from ACA compliance, but there are really three things that you need to evaluate in order to determine if you are in fact an applicable large employer. And what that means is if any of these three items do apply to you, then you do have to file in 2016. So number one, do I have 50 or more full-time equivalent employees? And I'll get into that calculation later on in the presentation. Do I own one or more companies where the sum of the employees is greater than 50 full-time equivalents? So is there somebody with common ownership that owns two companies where combined the employee population is more than 50 full-time equivalents? Am I self-funded? So I want to talk a second about self-funded. We do get a lot of questions from employers because they don't understand number three, and what that means is that the funding arrangement for the claims that you pay out, the claims that are paid out, are funded by you as the employer, meaning you pay for the premiums and you pay for the claims. So that is the definition of self-funded. Generally speaking, we don't have a ton of employers that are under 50 employees that are self-funded. However, it does happen. So if any one of these three items does apply, then you will need to file these forms. Why do I have to file? This is just a little insight on why the IRS is requiring these forms. So it's really to determine whether individuals have health coverage. If not, they have to pay an individual shared responsibility penalty. So they're essentially going to take the individual form that you have to submit with your taxes, and then they're going to match it up with the employer form to see if it is in fact accurate and if the individual was offered coverage. Whether individuals obtained coverage from the marketplace are entitled to a subsidy or a premium tax credit, so they can go to, in various instances, an employee, whether coverage isn't affordable or what have you, or it's not offered by the employer, they may go to an exchange and they may receive a premium tax credit. Whether applicable large employer member owes a shared responsibility penalty. And that's the whole pay or play, offering 98% of your workforce coverage that's affordable, minimum essential value, and minimum coverage. Minimum essential value and minimum essential coverage. And you need to file so that you can avoid tax penalties. What happens if I don't file? There's a $250 fine per full-time equivalent if you fail to file a 1095C with the IRS. There is also a $250 fine per full-time equivalent if you fail to furnish an employee with a 1095C. There is a max penalty of $3 million. There is penalty relief available in 2015 for companies that show good faith effort to comply. No relief is provided to ALE members that A, cannot show good faith effort to comply, or B, fail to timely file 1095C or furnish it to the employee. So essentially, as long as you're doing your best to abide by these rules, you will receive penalty relief. Who is doing the filing? We are doing the filing for most of our clients as long as you've gotten in touch with us. We will transmit the 1094C and the 1095C and any applicable B forms to the IRS electronically by March 31st, 2016. DPS is in fact handling this for roughly 300 clients. if you're sitting out there today and you're having an oh no moment, I haven't gotten in touch with them, I don't know what I'm going to do, I didn't think this applied to me, you can certainly grab one of us offline or email benefits@dominionpayroll.com. If you do end up deciding that you do want to participate, we need the following information by December 7th. This is our drop dead cutoff. We need a signed agreement, we need medical coverage statement of work, and we need a questionnaire filled out that details your measurement periods, etc. Someone will go over that with you if you do choose to participate. However, we do need all of these documents back to us by December 7th in order to get you set up to file on your behalf. So now I just want to share some steps to compliance. Essentially, what can you do in iSolved, and how can you monitor your employees? How can you stay compliant as it relates to ACA? And I think that involves a couple of things. So identifying full-time employees, making sure you're offering coverage to the right employees. You know, that requires a little work on your part. And that involves classifying employees correctly in iSolve so that the reports are running properly. Determining if you're an ALE. Establishing measurement periods, your new hire and your ongoing. Monitoring variable hour employees, and then making sure the coverage you offer is affordable. I think if you can do all of these things, and I'll show you some tools here in a little bit that will help you manage all of these. If you can do these and you have good faith effort in complying, you will not receive any penalties this year. So I think the first step is to determine who's full-time. Obviously it's an employee that, as defined by ACA, that's working 30 hours of service per week. You may need to make sure that when you are in iSolved under employment categories that you are classifying your employees as full-time or part-time. There is an ACA quote-unquote status associated with each of those. So for full-time, if you mark someone full-time in the system, the system reads it as ACA full-time. If you mark them as part-time, it means they're a variable hour employee in which they are not considered to reasonably work 30 hours, so you're going to monitor those employees. You need to do this for a couple of reasons, primarily for the forms in the report. So then, do you have over 50 full-time equivalents? So you can run under client reports the large employer compliance test, and what you do is you enter calendar year 2014. So you enter 1/1/2014 to 12/31/2014, and it's going to spit out a number at the bottom, and I'll tell you how we got to that figure in just a moment. But it's going to spit out a number at the bottom, and you'll see that this report says 22. Well, I'm going to show you how we got to that figure. As I just mentioned, classifying your employees in the system properly is very important because it helps drive this report. If this report comes out on a yearly basis and it says that you do not have 50 full-time equivalents, you are not responsible to comply with the filing requirements. So if you mark someone full-time, here's a row on this report that says full-time employee count. Every single employee that you have marked as full-time is going to populate in that column, or in that row, excuse me, and then the columns are each month. So you have January, February, March, April, May, June, July, August, September, October, November, December, all broken out individually. And you have, in January, there were 26 full-time employees that you have marked as full-time in the system. So then below that you see total hours per full-time equivalent calculation. FTE is the abbreviation for full-time equivalent. Total hours in this column are all the hours from your part-timers, or also known as variable employees. So this 356.67 is divided by 120. This is the IRS calculation in determining whether or not you are an applicable large employer. And that gives you a number. So that gives us 2 additional full-time equivalents. So you take the people that are already marked as full-time in the system, which is 26, and then you add the 2 that you get from all the part-time hours, and then you get a total FTE count of 28 for the month of January. Well, you get a number for every single month, and then you divide it by 12 to come up with an average FTE count. So here we see 22. Which would obviously not be subject to any reporting requirements. measurement periods. We have to have measurement periods in the system in order for the forms to produce. There's a questionnaire that anyone that is an applicable large employer has had to fill out telling us what their measurement periods are. If you do not tell us what your measurement periods are, there is a default in the system, which I will discuss. For the measurement period, you can have 3 to 12 months to determine if an employee averaged more than 30 hours a week. The new hire measurement period cannot be longer than the ongoing measurement period. The administrative period may be no more than 90 days. The stability period can be 6 months or greater, and as I mentioned, the system does default to the plan year formula, which I'm going to talk to you about on the next screen. So everything that I said just now probably sounds very, very confusing, and trust me, it was very confusing for me for a very long time. And then someone came out with a beautiful diagram. So the plan year formula works as such. It has the stability period starting on the effective date of your insurance. So what I'm going to do real quickly is kind of go through the definition of a measurement period, the definition of the administrative period, and the definition of the stability period. The definition of the measurement period is the period in which you're going to measure the employees to see if they were in fact full-time or part-time. Then the government said, well, let's give them an administrative period that they can be no more than 90 days to get their act together, to look and analyze their employee population and determine who they need to offer benefits to, and then they need to offer their benefits. So you can also kind of think of this as an open enrollment window. Then you have your stability period. The stability period is the period where no one can come on or off of the insurance that as of the effective date of the insurance has been signed up or not signed up. New hires is another story. But if you look at your measurement period and you determine you have 20 full-time employees and you offer those 20 full-time employees insurance, they may not drop off the insurance, and any part-time employee that was deemed part-time may not come onto that insurance for that entire 12-month stability period. So in this instance, you have a measurement period that starts on October of 2013 and goes to 9/30 of 2014. Then you have an administrative period that starts, and that is a 90-day administrative period. And then the stability period kicks in at the same time as your plan year. So the effective date of your insurance is 1/1, and so your stability period would start on 1/1. So we need to know all this information to put it in the system in order to calculate the forms, or to produce the forms properly. Another thing that you're going to need to do is monitor your variable hour employees. So most employers are picking a 12-month ongoing measurement period and a 12-month new hire measurement period. So the ongoing measures current employees, and the new hire measurement period measures employees as of their hire date. So if I'm hired today on 11/19/2015, a year from now, you as the employer are going to need to look at a report like this and determine, or my hours somehow, and determine what I averaged on a monthly basis, and if it was over 30 hours or not, and determine my benefit status as it relates to ACA. So if you look here at this report, we recommend running the report quarterly depending upon how many people you hire, but it's a very nice report. It's going to tell you what their current ACA status is, and the current ACA status is the status based off of how you've classified that employee in the system. If you have them as full-time, it'll be full-time. If it's part-time, it'll say part-time. And their average hours column is the hours they've averaged over the period in which you've run this report. So this report is called the ACA Full-Time Status Look-Back Report, and you can run this report, and you have to use at least a 3-month look-back date range, and it'll spit this out. And so over the 3 months, this employee averaged X amount of hours a month. So the first one is a full-time employee with 345 hours, and it also says their total hours, and then the next column says their look-back period status. So that is confirming that based off of the look-back period, you have this employee classified correctly. So if you go down to the third line and it says unknown, The employee is marked as unknown because they are you don't know if they're full-time or part-time. And they're averaging 33.33 hours. Well, now the look back status column says full-time, and the change required in red says yes, offer health benefits. So we always advise employers to run this on a quarterly basis to see if any new hires are approaching their you know their measurement period, the end of their measurement period, and if you will be able to tell from this report, and you'll be able to tell whether you should offer them benefits or not. And over on the left here, you've got their pay type and hire date, age, etc. Another way you can actually check their measurement period is under employee management, and then under employee benefits. We have to still give access to all of our clients for this, but this will be coming down the pipeline here shortly. But you can actually look on an individual basis and filter based off the ongoing or the new hire measurement what their actual status is. So it tells you when their measurement period started, their admin period started, their stability period started. And you can if you filter, and you can drop down also by new hire. Give you an idea of where they actually are in their measurement period. So then there's another report called the Affordability Report. And the Affordability Report is supposed to flag anyone based off of the safe harbor that you choose who's paying more than 9.5% of their salary in medical premiums. So there are multiple safe harbors to choose from: rate of pay, W-2 wage, federal poverty line, and I will tell you most people are choosing W-2 wage or rate of pay. And again, you can run this report. It's going to tell you whether or not you exceed 9.5%, or each employee does. There is also a report that I have not included here under client reports that is called the ACA Affordability Projection Tool, and that allows you to put in rates that you're considering. So if you're considering various health insurance options, you can plug those rates in and then run it against the demographics of your organization to see if anyone will be paying more than 9.5% of their salary. So those are just some steps to help you manage this process and stay compliant, avoid fines, maintain the integrity of your data, which in turn makes it easier for us to produce the forms. So kind of circling back here to the forms, the 1094B and the 1095B, just to sort of clarify what these are. It's for insurers, so that third line on the form, which I'll kind of point out in a second, is really for your dependents, and the insurance company is going to produce that if you're fully insured. And if you are self-insured, then the employer does actually have to fill out Section 3. Forms 1094C, 1095C, they pertain to ALEs, over 50 employees, used by the IRS to determine if they offered minimum essential coverage, and to calculate the penalties, also used by IRS and individuals to determine eligibility for tax credits in the marketplace. You must report for an employee who was full-time at least 1 month during the year. So the 1094C is just the transmittal, it's a cover sheet essentially, submitted with the 1095C forms, and it's going to say if they're a member of an aggregate group, meaning there are other FEINs associated with this organization. And it's also going to be used to mark transition relief. 1095C, the statement reporting on offers of coverage to employees. They must be issued to any employee who is full-time during the year, submitted by the IRS and the employee or plan participant. So if you see part 3 down here is where at the bottom, that is what is going to be produced most of the time by the insurance company. However, as I mentioned previously, if you are in fact self-insured, you will have to produce dependent information and provide also the months in which the dependents were covered. But that is only if you are self-funded. Otherwise, the insurance company has taken care of that. Part 1 is general information about the employee. Part 2, line 14, is discussing offer of coverage. Line 15 is going to report the amount that the employee has to pay for the lowest employee cost. And line 16 is reporting whether they were enrolled or not, or if they were in their transition period, what have you. we think a very common scenario is going to be 1A and 2C. You'll see here it can either be broken out by each individual month, or you can mark all 12 months. So 1A in line 14 means that you've offered your employees minimum essential coverage. That is also minimum essential value. You've offered it to the entire family, and it is under the federal poverty line. So that would be a 1A. And then actually nothing, as long as the coverage is under the federal poverty line, there is not going to be anything that populates for line 15. And then line 16, if the employee was enrolled, it would be a 2C if they were enrolled. And the only letters would be on this whole form, if someone was offered the coverage and enrolled in the coverage all year, it would be a 1A and then a 2C. I'm not going to get into all the other exceptions. There are plenty of tools out there on the internet if you Google the codes. You know, we don't have time to do a complete tutorial on it, but also please feel free to ask your broker, because I know that they'll have some insight, and we've seen a lot of very good presentations come from brokers on it and on explaining the codes, etc. So when can you preview the forms? We'll reach out to you and let you know when your compliance has been set up and is complete. And sort of the culmination of all of this is going to be you previewing the forms. So we will give you access to preview the forms. You'll go in, you'll preview them, and this should be happening here very soon. And you'll take a look, and as soon as you're ready to approve them, there is a button where you will also approve them. If a form is incorrect, you will be able to make individual overrides to employee forms. This is why I strongly encourage you to learn these codes, to identify if they are correct and if they are not. We are going to be producing thousands of these, so it makes sense for you to be able to understand common scenarios that, you know, may seem off. So if you do have an employee that is incorrect, you can come to employee management under benefits, and then you see ACA report overrides. Again, we have not made this yet available to you, but you will be able to produce a form entirely for them right here and save it, and it will override the one that the system produces. That is all. That concludes the ACA portion of the year-end compliance seminar. Thank you.